Hello, I'm Rob, and I'll show you in this video how to use TopGraphs to get the best return. The key figures we use to create the graphs are the most important of a company. If the fundamentals are good and rising, the price per share will also rise, as you can see here at Microsoft. There are exceptions when the price is higher than the fundamental data suggests, like here in 2001 when the price is above the blue line, Microsoft is overvalued. From overvalued to fair value, you only made 4% return in over 6 years. But if you buy the stock below value, here below the blue line, you would have a return of over 90% in 4 years when the stock reaches its fair value. Even in the long term, in 20 years, I had an annual return of 10% if I bought Microsoft overvalued, and 23% annual return if I bought undervalued. And you see that everywhere. Be smart and buy healthy companies when they are undervalued. To prevent buying a bad company, we use the risk analysis. In the risk analysis, you can see how the company has changed over the last 5 or optionally 10 years. If the company makes less profit today than it did 5 years ago, the margin shrinks or sales collapse, then you shouldn't buy this stock. The price per share will fall or run sideways until the fundamentals and the price meet again. To analyze a stock, you use the search field. Enter the stock you want to analyze. Now you can see at a glance whether the company is a good investment. And what you can see too, whenever Cisco Systems was undervalued, the price has returned to the fair value, to the blue line, and you could make great profits. If you want to filter the best companies from over 150,000 worldwide, you do that by going to the screener. Here you can filter the companies by country, by undervaluation, and a lot more. We are looking now for a company from the United States that is at least 20% undervalued. Now you can look one by one and see which ones are a good investment. Let's look at Franklin Street Properties Corp. If we didn't have TopGraphs, one could say the stock is undervalued and a bargain. But we can see in the graph that the company has had increasingly poor fundamentals over the last few years. And in the risk analysis, we also see that the fundamentals have not looked good for the company over the past 5 years. The company can recover, but I don't want to take the risk that the company does not recover, so we keep looking for another stock. I will add another filter, which is the market capitalization. I don't want any companies under $1 billion market capitalization. Let's take this stock, Alexion Pharmaceuticals. Here we see that fundamentally everything is perfect. However, since the company does not pay a dividend, I would only invest when the price breaks out. If we buy the stock now, we won't get anything for our investment until the stock goes up. Then I prefer to buy this stock when it starts to rise. If the company pays a high dividend, I would buy the stock now, but more about that in another learning video. I recommend you use TopGraphs like this first, and once you get in a routine, you can move on to use the extended functions. If you need more explanations, you can find more videos in the help section. Thanks for watching, and I wish you great investments for the future.